Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern, on Wednesday, the 10th of August, 2016. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Pretty light on overnight news. Report came out that the UK economy is slowing down after the Brexit vote. The National Institute of Economic and Social Research shows growth in the UK was 0.3% in the 3 months up to the end of July, compared with 0.6 growth in the 3 months to the end of June. Reminder, the Brexit vote took place on the 23rd. Norway says that if the UK is allowed to negotiate and rejoin the single market, as part of the European Free Trade Association, then Norway would have to renegotiate some of its trade agreements, and therefore UK should not be allowed to rejoin after leaving. Japan's core machinery orders rise for the first time in 3 months. Disney busted out some great numbers on its earnings, $1.62 per share on revenue of 14.3. And Yelp also had a surprise profit run. Other than that, looking at the flow of news, there really isn't all that much. The Economic Research Institute, ZOO, said to perform Fed-style stress tests on 51 European banks, found an overall capital shortfall of 123 billion euros. As far as what we've got for today, right after the open, half hour after the open, at 9 Central, 10 Eastern, we have the U.S. JOLTS job openings. This is for June, expecting 5.5 million, which is the same as prior. This is a measure of unfilled jobs. And then at 9:30 Central, 10:30 Eastern, we have our crude oil inventories expecting negative 1.5 million barrels. Distillate inventories expecting 500,000 barrels, and gasoline inventories expecting negative 1.5 million barrels for this week. And then at 1 Central, 2 Eastern, we have the monthly budget statement expecting negative 117.5 billion. As far as speakers, there's nothing on deck. Not seeing anything major on earnings post-close either. Just remember, for those of you trading the ZN, the 10-year note, at noon Central, 1 Eastern, we have a new 10-year note auction in the amount of 23 billion, expiring the 15th of August of 2026. So that's pretty much what's on tap. Let's have a quick look at what we expected yesterday versus what we got. So to start off, I want to remind everyone that I'm doing an open AMA today, the invitation for which is in the description for this YouTube live stream, as well as on my Twitter stream. But tomorrow I'm doing a talk at Futures IO about trading habits. There's going to be a 5-book giveaway, and the book that I recommended to be given away is called Peak. And it talks about peak performance, the whole idea, the myth of 10,000 hours to become an expert at something. This is basically the source, the man himself, who conducted that study that was referred to by Gladwell in his book Outliers. But in the process, as I was listening to this book, I have the audio version. In the process, I recognized why these hypos have been so important as part of my trading. And just as a refresher to those who are new here, the reason we go through these hypotheses, the idea is not that we're seeking perfection in our guess and we get to do high fives and do fist bumps because our hypo. Our main hypo is what the market played out. But essentially what we're doing is what was discussed in the book, in that we create a representation of what's expected given the best information that we have, and that way, as the market action unfolds, we have something to compare it to, and allows us to detect small nuances and create a more complete view of what setups to take in the market. So back to reviewing yesterday's action. Overall, Hypo 1 did not work out. The market ended up pushing higher immediately, and then pushing down through the range, and so there was no real choppy inside session, which is what I had expected. Hypo 2 ended up being what worked out, but I didn't go high enough with the test. I think I'm because of the tightness of the range, I'm expecting so little from this market that I didn't anticipate that it would actually run all the way up. We had an open auction in range, but it ran all the way up to the through the high of the prior session, and then all the way down, and then finished somewhere in the middle. That's what ended up happening. So Hypo 2 was actually the play. The hypo that was in play, but I didn't have the expectations the market ended up revealing. So let's look at what the market actually did. So here, this is yesterday right here. It starts from this point, the end of the profile. Remember, my charts that I'm showing you here, unless I say so, are day session only, meaning pit session only, which is 9:30 Eastern to 4:15 Eastern. Here's our open auction. We got a push down, very clean open auction, right up against the point of control, the prior day's point of control. At 21.76 to the tick, we've been doing that a fair amount, like back here, testing right to the prior day's point of control, and then we had an upswing to 79. We had a pullback to mid. This would normally create an opportunity for an entry. However, with an open auction in range, the mid trade there are some reservations to taking the mid trade under those circumstances, and so there was nothing there to do. And then it started to rotate out and all the way up to 21.83. What we ended up yesterday with is we broke the initial balance high, broke above the 3-day balance zone, the 3-day micro composite, and then we ended up pushing all the way down to form a double IB low. Double IB low has a historic probability of about 83%. That it would break. Past performance, not indicative of future results, of course. And this is a study that I haven't revised in about a year. And it's the probability that this will hold on a second test, the initial balance low, is fairly low. So the expectation is for a continuation, and it did get down into 73.75, where 73.25 was the prior day's low. So we almost had an outside day here. And then the market ended up pulling back and closing inside of the IB, which gives us a normal neutral day. Notice the point of control is at the upper range. Notice that we're trading 21.80.25 right now. The high of the overnight session is 21.8150 versus 21.8175. Point of control, stop a tick short. And we are right in this LVN, this key LVN zone. So let's clean this up. Overall, this is your key LVN right up here. So this is the point of control. So the key LVN is right there, and the market is opening in range, in value, just underneath it. The shape of the profile tells me that there probably isn't much of a consensus on value. If it had traded just a little bit longer, we would have had a fairly balanced lower value area if the point of control had shifted to the open, but it did not. Yesterday, the point of control shifted up to 21.8175, but I'm going to tell you the way this is shaped and the way it traded, or the way it was formed, this looks like an exhaustive shift in the point of control upwards rather than one that is accepting value. So I'm not sure what to do with it this morning. So I'm going to watch how it responds at the LVN. Does it get up here and then continue to rise? Or does it get up here and get rejected and then we start putting in a lower low, which could start our new leg lower, which would be actually a better trade than what we've had. Now, someone I follow on Twitter had a statistic this morning that I wanted to cite, and I have not checked its accuracy. I'm trying to find it. I should have probably saved it somehow. But he was saying that we've traded inside, I believe it was like we traded inside of a 0.5% range for 7 days in a row. Here it is. It's a gentleman named Ryan Detrick, at Ryan Detrick on Twitter. The S&P 500 has traded in an intraday range of less than 0.5% 7 of the past 20 days. The first 70 days of this year, it did that exactly 0 times. So it's interesting. And then he also says the S&P has made an intraday new all-time high 3 consecutive days in a row. Incredibly had 14 in a row in March in 1998. Very unusual trading is the bottom line. Very tight as well. So with that being said, let's switch over and look at what we've done here. So we had 2 days of balance, and I've extended the composite over. So if we go back to how things were before yesterday, you could see that the profile was fairly incomplete. So we have what looks like a ledge formation like that, like it's a shelf. A normal auction, remember, has low volume on the extremes, high volume around the middle or so, and then low volume on the other extreme. Why? Because as price goes higher, the buyers are then shut off because prices are considered too far away from value. Value may be somewhere in here. And so this is the normal behavior of a profile. And here what we have is just suddenly it's being shut off. Now, if I extend this profile forward, you can see it starting to fill in and extend out and get that sort of thinning out of volume as it builds something a little bit more normal. And then of course for the rest of the day we started to build a little bit lower, but when we build the entire profile to where it is now, it is not perfect by any means, but it does show a taper at the bottom, a lot of kurtosis in the middle, and somewhat of a taper at the top with this weird point of control that we got yesterday. Today, looking at what we should expect for today, my primary hypothesis, and this was a difficult one, my primary hypothesis is going to be, again, to expect the normal behavior, and the normal behavior inside of value and range is an open auction, push higher, test, and then ideally we would look for a test of 21.77 for the MC point of control, and then we start to shift down and push towards the lows here. The 73 quarter, 73.75 is the next test. That would be the higher probability given how we finished yesterday versus the point of control, although we recovered some of that today. If we look at the overnight, let's shift gears here for a second and just follow the routine, the habit. If we look at the overnight, there's nothing to glean here. It's pretty much the same as the profile from 2 nights ago right there. Same thing, same point of control basically. There's really not much we can gather from it. It did trade on the low end, pushed higher, and then has been stuck here, and it has a double top or close to it, but I don't expect another leg up uh, until the open. So I'm looking for this impulsive move up to finish with a test of 2181.75 at the point of control. That's why the primary hypothesis is what it is. And then once that happens, I'm looking for a rotation down into the bigger point of control, which is the microcomposite point of control. So let's look at the big picture here, and that's the primary hypothesis. Secondary hypothesis, again, open auction, looking for a test down 2177 and a quarter. If we do have buyers and we have another flagging formation for a continuation higher, then hypo 2 would be it. Then I'm looking for an open auction, a test down into the 77 area or so, and then a rise through the point of control and then a push to that 2185.50 target that we've had for the last week or so. That's hypo 2. That's how things are shaping up. I don't know. This is not my forte. This type of behavior where we're pushing new all-time highs. I think most of you who've been following for a while know that. These are the types of days where I'm just occupying my time doing other things. Very, very picky about what I stake out there. It is not my ball game. I recognize that it is not my forte, so I don't try to force anything, and I suggest the same to you. Don't try to force anything in this kind of environment. It's unforgiving, and it's not the best for short-term trading. Doesn't matter what you're doing, in my opinion, unless you're scalping. There's always a market for scalping. But you know, the prior day here, this day here had only 8 points of range. This day has 10 points of range. This is a far cry from the 15 to 22 point ranges that we've had earlier this year. There's no real continuity or buying or selling pressure in any given direction. It makes it very hard to sustain any moves. So you're looking for scale outs really quick once you get in. That's how things are shaping up in my opinion. So that's that. Again, I'll catch you this afternoon at 3:30 Central, 4:30 Eastern on the AMA. Take care.